Hey traders, Raghee here, and this is your September 4th free video. And I want to talk about a conversation that we had during the Forex in the Morning chat room. It's really at the heart of two positions that I had on in October. In fact, one has actually rolled over here into September, and that's the Aussie Loonie short. But I want to talk about what happens when you have the stars aligning, and what I mean by that is, what are the stars aligning? What does that mean? And how am I able to change my approach, either being aggressive in terms of the way I will massage my profit targets, the way I'll accept more heat in terms of a stop loss, a risk-based stop loss, and how hard I'll press a trade. We always hear, let your winners run, but I think there are ways we can define a winner that will give us a better template, a better look at why we should press it, and more confidence to press it. All right, so I want to pick up from this conversation that I had in the Forex Morning chat room with the folks there, and share that conversation a bit with you all here. And then we're going to go into some of the setups that I'm going to really focus on as we have tomorrow's Bank of Canada decision on rates. So we'll make this a two-part conversation. All right, so how and when to press trades? Well, there's a few things to think about here, and there are three aspects to our analysis. And I really got to cover this before we talk about the difference between why I pressed the Aussie Loonie and why, even though we had a really great short position on the 240-minute Aussie yen, why I went ahead and managed that and got out, and why I'm looking for another setup again. So why press one and not the other? Okay, so let's talk about the three types of analysis, and for that I'm going to go ahead and bring up the word pad here so you can take some notes. So there's three elements to analysis. I think all analysis. So there's three elements of analysis, and those three are technical, and this is not in any particular order of importance, okay? Technical, fundamental, and what I'll call price-based or price action, okay? Those are the three elements. Now, under this technical element, this is where I'll have things like the Fibonacci's, chart patterns. We can include in this trend lines, obviously any indicator, and that would include, I should mention that would include my wave, okay? So these are, the bottom line is here, this is very subjective in nature, okay? Technicals are very subjective in nature. Fibonacci is very subjective. Chart patterns, of course, are subjective, because depending upon what types of trend lines, horizontal support and resistance lines you look at, there's a lot of subjectivity to that analysis. Indicators, of course, your settings and how you use them. There's a lot of subjectivity to that. All right, when it comes to fundamentals, it's a little bit easier in terms of where we're looking for them. We got our economic calendar. For those of you that join me in the Forex in the Morning chat, we look at our news. So we're talking about headline psychology, headline risk, okay? We talk about long versus short-term fundamentals. We talk about central banks, of course, what we can glean from central banks. So anything that has to do with news and data that's lumped in your fundamentals. And of course, there's a great degree of subjectivity here too, because some traders might be looking at a particular headline in one reality. Another one might be looking at it on a different type of scope in terms of time frame and impact. They're all being discounted in different ways. So again, another subjective type of analysis. That brings us finally to price action. And price action, you'll hear me talk about order flow. You'll hear me talk about momentum. And what I'm talking about with price action is much more objective. The way in which prices move around psychological levels, your double zeros, 20s, 50s, and 80 pip levels. Your 200 DMA, especially on your 200, really your 50, and your 20-period DMAs. Again, I'm not talking about 20-period simple moving averages, because that would suggest then the way it is respected and responded to on a time frame other than the daily. I'm talking specifically the daily here. Okay, so those types of level near-term highs and lows are also much more objective. We can typically agree where a market has recently found a resistance level or a support level. Again, near term. I mean, I don't know that anybody here is going to argue with me when I say there's 80 level support on the Aussie yen. It's just where the lows have been put in. Okay, and there's little to argue about that. How we found that, there's no calculation. It just simply is what it is. That's where the lows were put in. Okay, so near-term highs and lows, you can even lump in there 52-week highs, lows. Again, they have a psychological impact. They're not really that subjective. They just are what they are. Okay, so those are three types of analysis. And when I say the stars are aligning, what I mean by that is essentially, if I spell aligning here, there we go. So when I talk about the stars aligning, what I'm talking about is all three of these are clear and known. We have a good idea of what the major stories are and what's being discounted. Okay? And when I talk about stars aligning, you really end up having to use all three of these to confirm that. All three of these elements of analysis. All right, now that I've mentioned that, I want to get into the Aussie yen and the Aussie loonie. Now, for those of you that have been with me in the chat room, you know that we've been pressing this Aussie loonie. I am just intent on driving this thing into the ground as long as I've got, of course, the fundamental backdrop, which is that kind of flat to slightly dovish RBA, the pessimism in Australia, the mining boom has kind of peaked, or at least it's stalling. There's a number of ways we've defined that. We've seen it discounted. Iron ore prices, those types of things are where the lack of that Olympic Dam expansion. I mean, there's a lot of things. BHP, we can go into all the aspects of what Governor Stevens is so concerned about regarding the Australian economy. The Bank of Canada, Governor Carney, we have that event tomorrow. This is where this Aussie loonie, the rubber's going to meet the road, because this has been a play on what has been a flat to dovish RBA and what has been a hawkish BOC. Now, there's no expectation for for an interest rate hike from 1.0 to 1.25. However, we do, and it's been baked into the cake. Traders are basically saying with this move lower on this pair, we are expecting tightening language in the statement. We're expecting a hawkish BOC. We're expecting some optimism. Okay? Those are the reasons the loonie has been so strong, whether it be against the Aussie, whether it be against the U.S. dollar. I mean, part of obviously the U.S. dollar, Canadian dollar downtrend is the weakness in the U.S. dollar, but a lot of this movement lower has been that hawkishness in the BOC. Again, another pair where I have a short position. I don't want to get too far off my main conversation here, which is, why would I ride and press a pair like this so hard? Well, I've got the clarity of the trend. I've had it since we really transitioned below the wave with the consistent red grab candles. Okay, I've had most recently, after a brief battle, but around the 23rd of August, we had a much more stable footing south of that 200 DMA. On the line of the sand, which is below it, I mean, this is now a much more bearish tone. I have the 4 to 6 o'clock angle of my wave. So technically, from a price action standpoint, the lower highs, the lower lows, the 200 DMA, my red grab candles, my 4 to 6 o'clock angle, and then the backdrop of the two central banks and their opposing positions regarding their individual economies. I had, again, this is really the stars aligning. Okay? So let me contrast that to a recent short position I had on the Aussie yen. And this was a 240-minute swing short. And this particular setup was based on the fact that the Aussie yen had recently rolled over. We were south of the 200 period simple moving average. I had the red grab candles, but I did not have the 4 to 6 o'clock angle. So I don't have market trend clarity here. That's one knock against it. Okay? I don't have central bank clarity. I've got a kind of flat to dovish RBA, and I've got a BOJ that is kind of ticked off that we're nearing that 78 level, that saber rattling level as I call it, on the dollar yen. So this dollar yen really makes me kind of cautious because I know that at some point the BOJ is going to be unhappy about yen strength. And part of being short the Aussie yen is taking advantage of yen strength as well as Aussie weakness. But again, from the clarity of the central bank positions, which we pretty much know, the BOJ does not want a stronger yen, and the Australian dollar is pretty weak. So we don't have the same kind of clarity. We don't have the same kind of drive that was so much a part of the Aussie loonie short. We don't have the market trend clarity. I do have the red grab candles, which then open the door, along with the break of the 200 DMA, to the 4-hour chart. So in this case, I didn't have the same kind of confidence. I didn't have the same desire to really press this pair. Now, by the way, we had gotten short and then took out at 81.30 profit target. We had just had an aggressive position. So it wasn't like we had a lot of flexibility with multiple lots here. The bottom line is, we left about 60, 70 pips on the table, and I'm okay with that. I'm into the Aussie loonie for 300 plus pips right now, and my willingness to drive that pair came from all those stars aligning. I don't have that here on the Aussie yen. I don't have it technically. I don't have it fundamentally. Okay, I had the psychology of the grab candles and being below you can see here the 200 DMA. I don't have all the stars aligning, which is where the lack of desire to drive this thing lower, that's where I don't have it here. Does that make sense to everybody? It's a really important point because a lot of traders are wondering, well, Raghee, when we talk in the morning, this is a trade that we've been talking about for some time. These are positions that I've had open. If you'll notice here, I've had these open since the 21st and 23rd of August. Okay, I added a couple other positions later on, like the dollar Canada that I talked about. I even have a short position in the New Zealand dollar, US dollar. Okay, very small on those two, as you can see. But I've been riding this one really hard for some time. And again, the confidence from that comes from the stars aligning. And that goes back to these three elements. So this is a conversation, like I said, we had this morning. And I really wanted to share that with you all here in tonight's free video. I think it's a big part of where confidence to treat a trade aggressively and really press it comes from. We have to have a reason. We have to have an understanding as to why we're riding a winner a certain way versus maybe being a little bit more proactive about taking profits off the table and maybe even getting flat as I did on the Aussie yen. Okay, because I didn't have all the stars aligning. So let's move on. And members, we'll talk about my setups that I'm focusing in on to take advantage of tomorrow's BOC and how I'm even managing my dollar Canada short position and how I'm managing this Aussie loonie position. I mean, it's a hugie. How are we going to manage these as we're dealing with the BOC? What if they are not that optimistic? What if they are not that hawkish? Where are the corrections we could take advantage of? We'll get into the power stats on those pairs so we can get some realistic price projections for our entries. And we'll continue that conversation in the members area.